Welcome back to Insights Out Season 2. I'm Dr. Jen, and, well, if you've been following along, you know in our last episode, we broke down stablecoins, these digital twins of the US dollar.
Hmm.
And they can actually earn you interest, kind of like buying bonds in the, traditional world.
Right. And that totally blew my mind. Because when you explained that some stablecoins are backed by US Treasuries and can pay yield,
Yeah.
it really clicked for me. Like, oh, this is the Web3 version of clipping bond coupons.
Exactly. And here's a fun did you know fact to start us off. Stablecoin issuers like Tether and Circle now hold more U.S. treasuries
Okay.
than entire countries like Germany or South Korea. That's wild. It shows just how big this space has gotten.
Wait, hold up. That means crypto companies are holding more US bonds than actual governments? That's insane.
Crazy, right? But it also makes sense.
How?
Stablecoins are becoming the bond market of Web3, which naturally leads us to today's big question. If stablecoins are like bonds, then what's the Web3 equivalent of stocks?
Ooh, I like where this is going. So, today we're talking about raising money, owning shares, investing in companies, the juicy part.
The juiciest part. Which is why we're diving into IPOs, initial public offerings, and their Web3 cousin, STOs, or security token offerings. We'll explore what they are, how they're similar and different,
Right.
and what the future of capital markets might look like when you put them on the blockchain.
Translation, Wall Street, meet Web3. And don't worry, I'll be here asking all the, but how does this actually work questions along the way. Okay, so let's start with what we know, or at least think we know, the IPO. I hear it on the news all the time when some big tech company goes public. What's really happening there?
You've got the right idea. An IPO is basically a company's debutante ball. It's been a private company, owned by its founders and early investors. An IPO is its grand entrance into the public market.
Okay.
And that's where it sells pieces of itself, called shares, to the public for the very first time.
I love a good party analogy. So it's like a super successful local bakery deciding it wants to be a national chain. It throws a massive, expensive party and invites the public to buy a slice of the company to fund the expansion.
That's a perfect analogy. But that party, it's incredibly exclusive and expensive.
Ah,
I like to call the IPO process Wall Street's red carpet. It costs millions of dollars in fees to investment banks, to lawyers. It's a long, grueling process reserved only for the biggest and most established companies.
so the average person, or even a promising smaller business, isn't getting an invite to that party. We just get to watch from the sidelines.
Most of the time, yes. And here's a did you know fact for this section. That huge price jump you often see on the first day of an IPO, the first day pop,
Yeah.
it can actually be a sign the company priced its shares too low.
Really?
Yeah. It means they left a ton of money on the table that could have gone into their own pockets for growth.
Ah, so the company that threw the party actually paid for way more champagne than it needed to. Got it. So if the IPO is the old school exclusive red carpet, what's the alternative?
This is where it gets really interesting. The alternative is the STO, or security token offering. Think of it as the digital upgrade to the IPO. It achieves the same goal, raising money by selling ownership,
Okay.
but it does it using blockchain technology.
Okay, so we're back to our bakery analogy. Instead of getting a fancy paper stock certificate in the mail, am I getting some kind of, I don't know, a digital receipt?
Exactly. But it's more than a receipt. It's a security token. It's a digital, programmable, and highly secure proof of your ownership.
Wow.
And it's stored in a digital wallet. The key here is the word security. This is a regulated financial asset, just like a stock, which is what gives you legal protections.
So it's legit, but just uses better tech. Does this actually happen? Are there real examples?
Absolutely. One of the landmark cases was the St. Regis Resort in Aspen, Colorado. Super high-end luxury hotel. Using an STO, they raised $18 million
Whoa.
by selling digital tokens that represented real equity in the property.
You're kidding me. So I, Leo, from my couch, could have bought a tiny piece of a 5-star Aspen resort, an asset that's usually only accessible to millionaires and private equity funds?
That's precisely the point. It's called fractional ownership. And that brings us to our next did you know fact. The total value of the world's illiquid assets, so things you can't easily buy or sell, like commercial real estate, fine art, private company shares,
Yeah.
is estimated to be over $78 trillion. STOs have the potential to unlock that massive market for everyday investors.
78 trillion with a T. Okay, my mind is officially blown again. This sounds like it completely changes the game.
It's a total paradigm shift. So let's put them side by side. An IPO is slow, analog, expensive, restricting it to the financial elite.
Right.
An STO is fast, digital, and cost-effective.
Right.
And it's opening the doors for smaller companies and global investors.
Let me try an analogy. The IPO is like a giant, powerful mainframe computer from the 80s. It takes up a whole room, requires a team of specialists to run, and only a huge corporation can afford one.
I love that. And the STO?
The STO is the smartphone in your pocket. It's 1,000 times more powerful, fits in your hand, it's connected to a global network, and almost anyone can have one. It democratizes the power.
That is spot on. And just like a smartphone, it's always on. Traditional stock markets open at 9:30 a.m. ET and close at 4 p.m. ET. Blockchain-based markets can operate 24/7, 365. An investor in Tokyo can buy a security token from a startup in Berlin in the middle of the night.
That's a huge deal. But with all this speed and accessibility, I have to ask again, is it safe? Is it regulated? I remember the Wild West days of ICOs, or initial coin offerings, where things were a lot more, I don't know, chaotic.
That's the most important question, and the answer is yes. The S in STO stands for security. Unlike many of those early ICOs, a security token represents a legal, regulated ownership stake in a real-world asset.
Okay.
It has to comply with securities laws in the jurisdictions where it's offered, and that's what gives investors protection and confidence.
Okay, that makes me feel a lot better. So it's not the Wild West. It's more like we're building a modern digital city with proper roads and laws instead of the dusty dirt tracks we had before.
Exactly. We're paving the roads for a new financial system. So what does this future city look like?
Yeah?
Imagine your investment portfolio in 10 years. Instead of just stocks and bonds, you might have tokens representing a piece of a blockbuster movie's future earnings, a share in a Kentucky Derby winning racehorse, or fractional ownership of a Picasso.
Whoa. So my cousin, who runs an awesome food truck, could potentially do an STO to fund a second truck instead of trying to get a bank loan?
In this future, absolutely. It democratizes capital formation. Fundraising is no longer a privilege reserved for, venture-backed unicorns in Silicon Valley.
Right.
It's a tool for creators, for entrepreneurs, and small businesses everywhere.
That's incredibly empowering. It feels less like we're trying to crash the gates of Wall Street and more like we're building a whole new, more accessible marketplace right next door.
And that new marketplace is being built as we speak. Our final did you know is that major financial institutions and tech companies are already developing the platforms and the infrastructure to make this a reality. This isn't science fiction. The foundation is being laid right now.
This has been a lot to take in, but it's incredibly exciting. It reframes Web3 not just as some speculative internet money, but as a fundamental upgrade to how our entire economy works. It makes you feel like you can actually be a part of it.
That's the perfect way to put it. The big takeaway today, is that this technology is doing for value what the internet did for information.
Okay.
It's making it more open, transparent, and accessible to everyone. It's a huge shift, but one that truly empowers the individual.
It really changes your perspective on what's possible.
And with that in mind, we want to leave you, our listeners, with a question to ponder. Now that you know this is possible, here's a question we'd like you to think about. If you could tokenize and invest in any single real-world asset, your favorite local coffee shop, a new invention, a piece of art, what would it be and why?